People think you need to be a billionaire to stop working. They think you need tens of millions in a bank before you can even think about financial independence. But I'm going to tell you something that might surprise you, coming from someone who built NVIDIA into a $3 trillion company. You don't need anywhere near as much money as you think to live comfortably and never work another day in your life. I've spent over 30 years building one of the most valuable technology companies on the planet. I've seen wealth created and destroyed. I've watched people chase numbers that don't matter while missing the point entirely. And after all these years, after all the success, after building something that literally powers the AI revolution, I've come to understand something fundamental about money that most people completely miss. The amount you actually need to be financially free is shockingly small compared to what society tells you. And today, I'm going to break down exactly why you can live off $500,000 in the bank and potentially never need to work again. This isn't theory, this is math, this is reality. And understanding this could completely change how you think about money, work, and what you're actually trying to achieve with your life. Let me start by being very clear about something. I'm not suggesting that $500,000 makes you wealthy in the traditional sense. I'm not saying you'll be living in mansions or flying private jets. What I am saying is that for many people, this amount of money invested correctly and managed smartly can provide enough passive income to cover a comfortable lifestyle without ever touching the principal. And that's a form of freedom that most people spend their entire lives chasing but never quite understanding how to achieve. Before we get into the numbers, I want you to think about something. Why do you want money in the first place? And I want you to really think about this question because most people have never actually examined their own motivations. They just assume more money equals more happiness. They assume they need to keep climbing, keep earning, keep accumulating. But what are you actually trying to buy with that money? When I ask people this question, they usually start listing things: a nice house, a good car, the ability to travel, financial security, not having to worry about bills. But when you dig deeper, you realize that almost nobody is actually chasing material possessions for their own sake. What they're really after is a feeling, the feeling of security, the feeling of freedom, the feeling of control over their own time. And here's the thing that nobody tells you. You can achieve those feelings with far less money than you think, as long as you're clear about what kind of life you actually want to live. I built NVIDIA because I was passionate about computer graphics and parallel computing, not because I was chasing a specific net worth number. The wealth came as a byproduct of solving problems that mattered and building something valuable. But I've watched many people approach it backwards. They chase money first, thinking it will give them freedom, but they never stop to define what freedom actually looks like for them. They end up on a treadmill, always thinking they need just a little bit more before they can finally relax. So let's talk about real numbers. Let's talk about what $500,000 can actually do for you if you invest it intelligently. This is where most people's understanding of money breaks down, because they think about savings in terms of how long it will last if they spend it. But that's the wrong way to think about it. The right way to think about it is in terms of how much income it can generate indefinitely. If you take $500,000 and invest it in a diversified portfolio of relatively safe income-generating assets, what kind of return can you reasonably expect? Well, if you put the entire amount into fixed income investments like bonds, treasury securities, or high-yield savings products, you can expect somewhere around 5% annual return in today's interest rate environment. That might not sound like much, 5%, but let's do the math. 5% of $500,000 is $25,000 per year. That's your passive income. Money that comes in whether you work or not. Money that gets deposited into your account while you sleep. Now, $25,000 per year isn't going to buy you a lifestyle of luxury, but here's what it can do. For a single person living in a reasonably affordable area of the country, $25,000 covers basic living expenses. We're talking about rent or a modest mortgage payment if you already own a home, utilities, food, transportation, health insurance, the fundamentals. You're not eating at expensive restaurants every night. You're not buying designer clothes. You're not taking exotic vacations every month. But you're also not living in poverty. You're living a simple, comfortable life. And most importantly, you're not trading your time for money anymore. You don't need a job. You don't need a boss. You don't need to set an alarm clock. unless you want to. That is freedom. Maybe not the glamorous version of freedom that gets portrayed in movies, but real, tangible freedom nonetheless. Now, let's say you're willing to take on a bit more risk. Let's say instead of putting everything into fixed income, you create a balanced portfolio, maybe 60% stocks, 40% bonds, something along those lines. Historically, a portfolio like that has returned somewhere between 7 and 9% annually over long periods. Let's be conservative and say you average 8%. 8% of $500,000 is $40,000 per year in passive income. $40,000 per year changes the equation significantly. Now you're not just covering basics. You have room for discretionary spending. You can travel occasionally. You can eat out. You can enjoy hobbies. You can help family members if needed. And you're still not touching the principal. You're living entirely off the returns your money generates. This is the power of understanding how capital works. Once you have enough capital generating sufficient returns, you've essentially bought back your time, your most valuable and finite resource. But here's where most people get stuck. They hear these numbers and they think, that's not enough. I need more than $40,000 a year. I have kids. I live in an expensive city. My lifestyle costs way more than that. And they're probably right. If you're supporting a family of 4 in San Francisco or New York, $40,000 won't cut it. But that's exactly the point I'm trying to make. Your financial needs are directly tied to your lifestyle choices. If you choose to live in one of the most expensive cities in the world, you're going to need a lot more money. If you choose to have expensive hobbies, drive luxury cars, and maintain a certain image, you're going to need a lot more money. But those are choices. They're not requirements. They're not inherent to being happy or fulfilled. They're preferences that come with a price tag. And if you're willing to adjust some of those preferences, you can achieve financial independence much sooner than you think. I'm not suggesting everyone should move to a cheap rural area and live like a monk. What I'm suggesting is that you need to be honest with yourself about what you actually want versus what you think you're supposed to want, because that's what society tells you. There's enormous pressure to maintain appearances, to keep up with peers, to signal success through consumption. But that pressure is costing you your freedom. Let me give you a different way to think about this. Every dollar you spend on something you don't really need or value is a dollar that could have been invested. And every dollar invested eventually becomes a source of passive income that buys back a piece of your time. When you look at purchases through this lens, your perspective shifts. That $70,000 luxury car, that's not just $70,000. That's potentially $3,500 to $5,600 per year in passive income you're giving up, depending on your investment returns. Is the car worth more to you than that annual income stream? Maybe it is, but at least now you're making an informed choice rather than an automatic one. At NVIDIA, we make graphics processing units and AI accelerators, very expensive, high-tech equipment. But I don't drive a flashy car. I don't wear expensive watches. I don't live in the biggest house I could afford, not because I'm cheap, but because I realized long ago that those things don't actually improve my life in meaningful ways. What improves my life is doing work I find interesting, spending time with people I care about, and having the freedom to pursue projects that matter to me. None of that requires excessive consumption. Now, let's talk about something that makes the $500,000 equation even more compelling: Social Security. I know many younger people assume Social Security won't exist by the time they retire, and there's certainly uncertainty around the program's long-term funding. But for people who are currently approaching retirement age or already retired, Social Security provides a significant income supplement. The average Social Security benefit is around $1,900 per month per person. That's roughly $22,800 per year. For a married couple, both receiving benefits, that's $45,600 per year in guaranteed income from the government. Now add that to the returns from your $500,000 investment portfolio, and suddenly your financial picture looks much more comfortable. Let's say you're getting 8% returns on your $500,000, which gives you $40,000 per year. Add $45,600 from Social Security for a couple, and you're now looking at over $85,000 in annual income. That's a solidly middle-class lifestyle in most parts of America. You can live quite comfortably on that amount. Travel, pursue hobbies, help family members, enjoy your life, and you never have to work again. But here's what's really important to understand. The power of this approach isn't just about the specific numbers. It's about the mindset shift that happens when you stop thinking about work as mandatory and start thinking about it as optional. When you reach a point where you don't need to work for money, everything changes. If you choose to continue working, it's because you want to, not because you have to. That changes your relationship with work entirely. You stop tolerating bad bosses. You stop accepting projects that don't interest you. You stop compromising your values for a paycheck. You have leverage. You have options. You have power. And ironically, this often makes you more successful professionally because you're only doing work you genuinely care about, which means you do it better and with more energy. I've seen this play out countless times in the tech industry. The most successful people aren't the ones desperately chasing money. They're the ones who are so passionate about what they're doing that money becomes a secondary consideration. They build valuable things because they're obsessed with solving problems, and wealth follows as a natural consequence. But to get to that mindset, you need to solve the money problem first. You need to reach a point where you're not worried about survival, so your brain can focus on creativity and contribution. This is why I think the $500,000 threshold is so powerful. It's achievable. Most people can't save $10 million. That's just not realistic for the vast majority of the population. But 500,000, that's doable for many people if they start early, save consistently, and invest intelligently. A married couple, both working, saving 20% of their combined income, investing in index funds over 25 to 30 years, can absolutely accumulate $500,000 or more. It's not easy. It requires discipline, but it's achievable. And once you hit that number, if you've kept your lifestyle reasonable, you're done. You don't need to work anymore if you don't want to. You've won the money game. Everything after that point is optional. You can continue working and building wealth if you enjoy it. You can retire completely and live off your investments. You can work part-time doing something you love without worrying about the pay. The choice becomes yours. And that's the ultimate form of wealth. Not having more money than you know what to do with, but having enough money that it stops being a constraint on your choices. Now, I need to address something important. None of this works if you're reckless with your money. I've seen people inherit or earn large sums and lose it all through bad investments. Usually investments in things they don't understand, recommended by friends or family, driven by emotion rather than logic. Restaurants, bars, real estate developments, startup companies. Most of these fail, and they fail because the people investing in them don't have the expertise to properly evaluate them. If you want your money to last forever, you need to prioritize capital preservation over capital appreciation. You're not trying to double your money overnight. You're trying to generate steady, reliable income that will sustain you indefinitely. That means boring investments, index funds, bonds, dividend-paying stocks, real estate investment trusts, things with proven track records and reasonable risk profiles. Not your cousin's great business idea. Not the hot stock tip you heard about. Not cryptocurrency speculation. Boring and reliable beats exciting and risky when your financial independence is on the line. There's one more critical factor we need to discuss: inflation. This is where many people's financial plans break down. If you have $500,000 generating $40,000 per year, but you never touch the principal and you spend all $40,000 every year, your purchasing power will gradually decline. Why? Because inflation erodes the value of money over time. What costs $40,000 today will cost more in 10 years, in 20 years, in 30 years. The average inflation rate in the United States over the past century has been around 3% per year. That means prices double roughly every 24 years. So if you're 45 years old when you retire with $500,000 and you live to 85, you're looking at 40 years of retirement. In that time, if inflation averages 3%, prices will more than triple. Something that costs $1 when you retire will cost over $3 by the time you're 85. This means your investment strategy can't just generate income. It also needs to grow your principal at least enough to keep pace with inflation. If your portfolio earns 8% and you spend 5% to live on, that leaves 3% to reinvest. That 3% of growth in your principal should roughly offset inflation maintaining your purchasing power over time. This is why the math works. You're not spending all your returns, you're spending most of them, but reinvesting enough to keep the real value of your portfolio intact. This is also why you need to be careful about withdrawing too much. If you start spending 6 or 7 or 8% of your portfolio every year, you're eating into your principal. And once you start doing that, you're on a timer. Eventually, the money will run out. But if you keep your spending at or below your after-inflation returns, your money can last forever. You can pass it on to your children. They can pass it on to their children. Properly managed, $500,000 can provide for multiple generations. Let me share something personal. I didn't grow up wealthy. My family immigrated to the United States from Taiwan when I was young. My parents worked hard to provide for us, but we didn't have much. I worked as a dishwasher at Denny's as a teenager. I cleaned bathrooms. I know what it's like to start with nothing. And I think that background shaped how I think about money in ways that have served me well. When you grow up without much, you develop a different relationship with money than people who always had it. You appreciate it more. You're more careful with it. You don't take it for granted, but you also don't worship it. You've lived without it, so you know you can survive without it if necessary. That removes the fear that drives so many bad financial decisions. The fear of not having enough, the fear of losing what you have. That fear makes people either too conservative or too aggressive. Either they never invest and miss out on growth, or they take wild risks trying to get rich quick. The middle path is usually the right path. Take reasonable risks, invest consistently, diversify, keep costs low, be patient, don't try to time the market, don't panic during downturns. These principles aren't exciting. They won't make you rich overnight, but followed over decades, they're incredibly powerful. And they're how most people who achieve financial independence actually do it. Not through luck or brilliance, but through discipline and time. At NVIDIA, we succeeded because we stayed focused on our mission for decades. We didn't chase every trend. We didn't pivot to whatever was hot at the moment. We believed in parallel computing and graphics processing, and we kept pushing that vision forward even when it wasn't obvious that it would succeed. That patience and long-term thinking eventually paid off massively. The same principles apply to personal finance. The boring, consistent approach wins, not the exciting gambles. I want to address another common misconception. Some people hear about living off $500,000 and they think it sounds like giving up, like settling. Like you're not ambitious enough if you're satisfied with that level of wealth. But I completely disagree with that framing. Financial independence isn't about giving up. It's about gaining control. It's about removing the constraint of needing money so you can focus on whatever you find meaningful. Some of the most ambitious, accomplished people I know are financially independent at relatively modest levels of wealth. They're independent because they've kept their expenses low, not because they've accumulated huge fortunes. And that independence allows them to take risks in their work that they couldn't take if they were dependent on a paycheck. They can work on long-term projects that might not pay off for years. They can turn down lucrative opportunities that don't align with their values. They can speak truth to power without worrying about getting fired. That's not settling, that's power. I started NVIDIA with 2 partners in 1993. We didn't take salaries at first. We lived off savings. We maxed out credit cards. It was risky. But we could take that risk because our personal burn rate was low. We weren't trying to maintain expensive lifestyles. We were focused on building something. And that focus, that freedom from financial pressure in our personal lives allowed us to make better decisions for the company. We could play the long game. We could invest in R&D. We could turn down acquisition offers. We could build for decades, not quarters. If we had been personally over-leveraged, if we had expensive mortgages and car payments and all the trappings of success, we might have been forced to make short-term decisions that would have compromised the company's long-term potential. Financial independence at the personal level gave us freedom at the business level. And I think that's a pattern that repeats across many successful ventures. The founders who succeed are often the ones who keep their personal finances simple so they can take big swings professionally. Now, I need to be realistic about who this approach works for and who it doesn't. If you're 25 years old just starting your career, $500,000 probably seems impossibly far away. And that's fair. You're at a different life stage. You should be focused on building skills, advancing your career, increasing your earning power. For you, the focus should be on saving and investing consistently, even if it's small amounts at first. Take advantage of compound interest over time. Invest in yourself and your capabilities. Build the foundation. If you're 45 or 50, closer to traditional retirement age, and you haven't saved much, this might feel discouraging. The math is harder for you. You have less time for compound interest to work, but it's not hopeless. You might need to work longer. You might need to cut expenses more aggressively. You might need to think creatively about downsizing or relocating to a lower cost area. But financial independence is still possible if you're willing to adjust your lifestyle expectations and stay disciplined with your finances. If you're someone with significant family obligations, kids in college, aging parents who need support, medical issues, the $500,000 threshold might not be enough. You might need more cushion. That's okay. The principle still applies. Figure out what your actual expenses are, add a buffer for unexpected costs, and work backwards to determine how much you need. Maybe for you it's $750,000 or $1 million, still much less than the 5 or 10 million that many people assume they need. The key insight is that the number is knowable. It's not infinite. It's not this vague, impossible dream. It's a specific target that you can calculate based on your actual lifestyle and expected investment returns. And once you know the target, you can create a plan to reach it. How much do you need to save each month? What rate of return do you need to average? How long will it take? These are all answerable questions. And answering them gives you control and clarity, which reduces anxiety even before you've achieved financial independence. I think one of the biggest problems in modern financial culture is that everything is geared toward making you feel inadequate. Advertising constantly tells you that you need more. Social media shows you other people's highlight reels, making you feel like you're falling behind. Financial services companies want you to think you need their expensive products to succeed. There's an entire industry built around making you feel like you don't have enough and you never will. But here's the truth. For most people, enough is much less than they think. You don't need a yacht. You don't need a mansion. You don't need a private jet. Those things don't actually make people happy. Study after study shows that once you reach a certain level of income, somewhere around $75,000 to $100,000 per year, depending on where you live, additional money has diminishing returns on happiness. You're not twice as happy making $200,000 compared to $100,000. You're maybe slightly happier, but not proportionally so. What really makes people happy is time freedom, autonomy, good relationships, meaningful work or activities, health, purpose. None of these things require massive wealth. In fact, the pursuit of massive wealth often undermines these things. You sacrifice relationships for career advancement. You sacrifice health for a stressful job that pays well. You sacrifice autonomy by becoming dependent on a large income that locks you into a particular lifestyle. The treadmill speeds up, and getting off becomes harder the longer you're on it. This is why I think it's so important to think about financial independence early and often. Not because you should retire at 30, but because you should be building the option to retire at 30 or 40 or 50. That option gives you power. It gives you leverage. It allows you to make choices based on what's best for you rather than what pays the most. And paradoxically, that often leads to better outcomes in every dimension of life, including financially. The people who chase money desperately rarely get rich. The people who focus on building valuable skills, solving important problems, and maintaining their integrity end up doing quite well financially, even though that wasn't their primary motivation. Money flows to value creation. If you create genuine value, whether in business, in art, in teaching, in healing, money tends to follow. But if you chase money directly without creating value, you usually end up frustrated and empty-handed. At NVIDIA, we never set out to build a trillion-dollar company. We set out to solve hard problems in computer graphics and parallel computing. We wanted to make computers faster and more capable. We wanted to enable new applications. The company became valuable because what we built was genuinely useful to millions of people and thousands of businesses. That's how real wealth gets created, not by chasing valuations, but by creating value. So let me bring this all together. The reason you can potentially live off $500,000 is not because $500,000 is a huge amount of money. It's not. It's because if you invest it properly and keep your expenses reasonable, it can generate enough income to sustain a comfortable lifestyle indefinitely. And a comfortable lifestyle is really all most people need to be happy. The rest, the luxury goods, the status symbols, the keeping up with others, that's not about happiness. That's about ego and insecurity. And you can spend your entire life feeding that beast and never be satisfied, or you can decide that enough is enough. You can define what a good life looks like for you specifically, calculate what it costs to live that life, build the capital base necessary to sustain it, and then you're done. Game over. You've won. Everything after that is optional. You can keep working if you love what you do. You can build more wealth if that's fun for you. You can give money away to causes you care about. You can help family members. You can take bigger risks knowing you have a floor under you. But you're making those choices from a position of strength, not desperation. You're not working because you have to. You're working because you want to. And that changes everything. This is what financial independence really means. Not having so much money that you can buy anything you want, but having enough money that money stops being a primary consideration in your decision making. When you get there and it's more achievable than you think, you'll understand what I'm talking about. The weight that lifts off your shoulders, the clarity that comes with knowing you're okay no matter what happens, the freedom to be authentic because you're not dependent on anyone's approval. That's the real payoff. That's what the money is actually buying, your life back.